to the cloud. Very nice. Welcome everyone. If you're new here, it's very easy how we work. We're going to go through the 3-5A rules of how to find a good 3-5A as well. And we're going to try to do some live charting as well to find good setups that we might be able to trade. So I'm going to wait a little bit more just so everybody can join in, have a chance to join in for this session. Who are new, brand new here, people? Raise your hand in the chat or say hi in the chat as you're new. Hi, Estelle. Welcome, welcome. Yeah, some of you guys are not new. I see you guys. I see you. I know your name. Welcome if you're brand new. 1 week old. Okay, it counts as a new. First mentoring session, Murad. Very nice. Very nice. Thank you for your consistency, guys. Joining those events is where you learn. Joining those events is how you grow as a trader for sure, and you'll be able to ask questions and get better in the end. Let me share my screen over here. Share that screen, and we're gonna get started. John Monzo, I know you're here. You're always there. Do you have a job, John Monzo, or you're just full-time trading? Quick questions like that. You're working from home? A lot of free time, my man. A lot of free time. I see you in the chat. I'm like, I have free time on my own, but this guy is like everywhere. You have too much free time, yeah. Okay, let me try to grab the chat again, even if I so I can get a good idea of what people are saying. So you guys can see my screen, right? Okay, very nice. So the rule of the 3-5A, basically, we have impulse wave and corrective wave in an Elliott wave, just like this. The rule of the 3-5A is that the third wave cannot be the smallest, right? 2 cannot go past 0. 4 cannot go in the price region of 1. And if 2 is simple, 4 must be complex. Or if 4 is simple, 2 must be complex in the end. So those are the kind of rules that are ruling the Elliott wave world. Now, if we have a pattern like we have here, to actually expect the fifth wave, you can use actually 2 tools in the 3-5A world. You can use a trend-based fib extension and the fib retracement tool. Those are the 2 fibs that we're using to plan the trade and to use it as a guideline. If you use a trend-based fib extension from 0 to 1 back to 0, you can expect the fifth wave to be either 161.8, 261.8, or 361.8. Is it actually bullseye on that? No. Sometimes you will see a price region, but you will see reaction to those points. So if we see a fifth wave going right above the 261.8, but getting back down and reacted to that level, yeah, of course, it might be a good level. Same thing for the 361.8. Now, if one wave is retracing to 2 at or past the 61.8 of the retracement tool, if I take the fib retracement tool, the regular one, and I fib this level here, I see that my second wave is retracing past the 61.8, then you can expect the 261.8 or the 361.8 to be hit more easily on the fifth wave. If it's not, if the second wave is like this, just a shallow retracement, then you can aim for the 61.8, the fifth wave to be around the 161.8. You can consider that. That's why you see some of the chart actually signaled by Craig hitting the 161.8 on the actual fifth wave. So if I take the fib retracement tool again, sometimes you have smaller wave. Let me just redraw a little bit of this. There you go, and you fib that level over here. You can still expect, right? You can see this. 3 is not the smallest. Actually, this one will be a bit smaller, like this one. You get the idea, guys, right? Do I have to draw a perfect Elliott wave for you guys? There you go. So about this one. So this is a shallow retracement, not going to the 61.8 of the one wave. The 3 is still not the smallest. And you get the 4 is not going in the price of the region of 1. 2 is not retracing past 0. So this one could be still a valid one, even if it hit just the 161.8 and not the 261.8. I'm just gonna put the other setup back because I like the other setup a little bit more. There you go. Or we can even go there. Usually, when you trade the 3-5-8, you're looking for kind of a head and shoulders pattern. So the ABC will look something like this in a perfect world. It won't be in a perfect world because we're not in a perfect world. You cannot expect. That's why you have to use judgment call in some of those 3-5-8s and some some of those in trading in general. You have to use judgment call because nothing is going to be textbooks. Maybe once in a while, but a lot of the time it won't be. So when you see those impulse wave, right? You see an impulse wave, corrective wave, impulse wave, corrective wave, impulse wave, and now you see it retracing back. You validate those things. Is it a valid Elliott wave? You validate the rule. Yes, it is. Fifth wave is at the. Let me just draw it again, just to make sure I'm not saying anything wrong. So yeah, we're at the 261.8 over here. Bullseye on it. You see a retracement. You count your wave. Everything is fine. What I like to do. That's a meeting though. I know Craig spoke about that in the mentoring session, the main mentoring session in the Monday. I like to put a trend line on the 2 and 4. Why do I do that? Because this is not trend, right? We see it bounce, the 2 and 4 bounce on the actual trend line. If you want to short that thing, you want to see weakness in price action. And for me, when I see price breaking that level, it shows weakness, and retesting it at the actual level of my entry, that's added confluence for me. So you have the 1, 2, 3, 4, 5 ABC. Now, when you want what you want to do when you want to get into that trade, you take the actual fib retracement tool. You fib from 5 to A when you have a valid A. Okay, one more thing. You have to wait for the price to pass 3, right? You don't want to actually do something like this because this is not a valid 3-5-8. You want it to pass cross 3, and now you can expect to get an entry. If the price of A goes to here, I'm not trading that because it passed 4, and actually it could even be to C already because it just did that little dip like this one here, crossing and doing like this. And when the price is coming back up, it's going to go to its original state, which is an uptrend. So you might get stopped out of those. So you don't trade if the A or your C or whatever number passed 4 and it did not retrace at all. I won't trade that because that's too risky for me. The trading journey is a risky risk management stuff, right? You want to be able to get in the nice trade, which has the less the correct risk, but you want to have the most probability of winning this thing, right? So if the price is coming past A for me, it's too risky for me. I'm not getting in. So we have an A not passing the 3, not passing the 4, and you take the fib retracement tool. Now I have a fib retracement which is only 61.8. So I'm gonna fib this move here. So 5 to A, and you want to get in at the B over here. So let's open a short position. Stop loss above 5, not too close, not too tight, right above 5. And stop loss the take profit now. When you see a A and you're planning a trade to see if the trade is valid and is a good trade for you to take, you want to have at least 3 risk reward on each of those trades. If you have 2.52, you would skip that. So to know if it's valid one and if it's worth taking, you take the trend-based fib extension, you do from 5 to 8, back to 5, and you aim for the 161.8 over here, or the 261.8 over there. Which one? I'm going to show you after when we're going to do the real take profit. So now we can see that we have a 3.09 risk reward. So this is a good trade. When you have a valid B, like we do over here, and the price is crossing A, first of all, when price you get in that trade, the price is crossing A, you want to reduce your risk over to the swing high or break even if possible. And when your price is breaking A, now you know that the B is the real B, and now you want to do the take profit, the final take profit. Final take profit is using the trend-based fib extension from B to A and back to B, and aim it for the 161.8 or the 261.8 as a final take profit. Right now, just by the eye of it, judging. Okay, I'm gonna go for the exception. So what is your take profit, the 161.8 or the 261.8? What I like to do, I take the fib trend-based fib retracement tool from 0. I fib the whole wave from 0 to 5. I see that the 61.8 is over here. 61.8 is basically the strongest level of reversal. So price could bounce at this one. and we want to make sure that we're getting a nice trade evenly. So when you see a 61.8 over here, you want to aim for the one closest to the 61.8. So right now we can see that the 261.8, they're almost equal at those levels. So that's, yeah, now you're gonna have to make again a judgment call. Do I take the 161.8 or the 261.8 without being greedy, of course, because greediness is not the good thing in trading. So if I remove that and I know that this the 61.8 is about in the middle of the 161.8 or 261.8, usually those C waves tend to stop right up about in the middle of the 1 to 2. So we can see that the 261.8 is pretty much bullseye on where it should retrace after that. So in that case, in that specific case, I would aim for the 261.8, and I would put myself a nice reminder, a nice alert at the 161.8, in between those two, and at the 261.8. I want to be alerted when the price cross those price level to make sure that I get involved. I look at it, and do I see a strong reversal point with candles reacting to those level? If I do, I might want to close the trade at the 161.8, which is nice risk reward already. Or you might want to take half of the profit at those levels. That is out of the rules of the 358. So now you're getting into judgment call land. So that's going to be up to you guys, but try to stick to the rules of the 161.8 or the 261.8, the one closer to the 61.8 of the whole move. You're going to have to make a decision on that though. Gabriel, is it possible to aim for the 61.8 of the overall trend? I see Sheepy doing that. You can do that, but when you start, as you are right now, Gabriel, I think you're pretty new, stick to rules. Rules are your best friend. Rules won't get you into FOMO. Rules won't get you greedy. Rules, you won't fall into those traps. If you are trying to actually modify the rules, I'm going to end this, I'm going to go for the 361.8 over here because I know Bitcoin is going to go down, it's going to come crashing down, you're going to get hurt for sure. I did, all trader did, we all went through those things, and now we all stick to rules. Why? Because this is your safest zone. Establish some rules, and if you're brand new beginners, stick to rules. And as you evolve into the trading, you see much and much reaction at the 61.8 of the whole move. Then you could make that trading the 358 evolve to make it your own in the end. Yeah, it is recorded, Patrick. Thank you, guys. Thank you. Sometimes it's easier for me to speak about that. Sometimes it's not so. Yeah, BTC dump pump keeps screwing my 358. Right. So 358, TC1, CH1, those are all trending patterns. You need a trending market to trade those effectively. Can you trade them without it being a trending market? Yes, you can, but it's going to be a little bit harder to spot those and a little bit harder to get a consistent win out of this. So of course you can still get wins, but you will get used to those things as we all did at the beginning. Market is trending, everything goes fine. Market is going sideways. Now everything goes sideways for your trading as well. Learn how to stop trading when you see things not going your way. If you have an edge, you want to trade that edge. If your edge is not working, you wait patiently. You don't lose money. You wait patiently for your edge to show up on top. And when you see your edge show up on top, you make the market pay for your pain. That's basically it. Yeah, Gabriel, stick to the rules. The recording is going to be posted on Teachable by Andrew. I'm not managing that, so I cannot say where it's going to be. Yeah, just want to review some of the question. Where does the second wave start? From 1 to 2, 2 to 3? The second wave is a retracement wave, Boris. So we have impulse wave, corrective wave, impulse wave, corrective wave, impulse wave. So the impulse wave is 1, corrective wave is 2, impulse wave is 3, corrective wave is 4, impulse wave is 5. Yeah, I will do some live charting for sure. Yeah, sure. Do you guys have any other markets? How does market volume of a pair affect your decision to take or not take a trade? I am on Bybit, and volume for 1 inch doesn't look great, for example. The thing with volume is that it is specific to your exchange. If you're trading with on Bybit exchange, your exchange might be low, but on MEX it's going to be high. So yeah, you want to use that, but it's not representative of the actual overall wave unless you have bookmark or software that actually read the orders of the general market. But if you just trade right now, this chart is on Phoenix. So if I add a volume chart in there, you're going to see volume for Phoenix, right? You're not going to see the volume for the overall market. So pay attention to that. Yes, some people are trading volume, and that could get a good idea and to add confluence to your trade for sure. Can you share that setup of your Fibonacci? How it is configured? Sure. So this is my fib retracement level that I use. If you guys want to take a screenshot, now is a great time for you to do. Yeah, Kiko, it's gonna be on Teachable. Now I don't know where on Teachable, but yeah, it's gonna be there. So this is the trend-based fib extension I use. This is the regular fib setups I use. You can take a screenshot of that. I'm gonna leave that for maybe 5 more seconds. Okay, and this is my fib settings for only the 61.8, which is super simple. I like that because my chart don't get crowdy with all other levels that I don't use when I just want to see the 61.8 of the move, right? So that's about it. Those are my fib settings. Do you look at RSI? Sure. Okay, let's talk about confluence. When you see those move, one thing that could save your ass is to have confluence around a trade. Confluence could be downtrend coming to an uptrend. Let's see if I can just do a channel here. See, we have a downtrend. So the price action is doing this. And we see that kind of pattern breaking out. So this is a new uptrend. Actually, this could be a CH setup, but yeah, I'm just going to do this over here like this. No, yeah, I already have that, the lower one. So we see that we have a breakout of the downtrend. Now it's time to look for a 358. When you see a breakout of a trend, breakout of a triangle, breakout of a support of a resistance, this is when you want to get your eye out for the 358 setup and the CH1 as well, but 358 as well. And you see those one. So this is added confluence, right? You see we have a CH1 channel over here, but we see a breakout out of it into a new downtrend. So this is an actual confluence. And if you take, let me just go over here. And if you extend that wave a little bit above here, and we fib that level from top to bottom, right? I'm fibbing right now the downtrend. I'm gonna draw that again because you guys are gonna go crazy if I don't. I don't think you guys are gonna see what I want to see to show you guys. Okay, hold on. So we see this. So I'm fibbing that level. Let's go over here. The downtrend, and we are the latest wave at the top on the just right before your yacht wave, and you see that the 61.8 of that move is at the fifth. That's added protection. That's added confluence. That the fifth might be a fifth, and right. So if you snipe that entry, you want to see that as protection. What is protecting my trade to be killed? Right now, I have the fifth wave, which seems to be valid. That is protecting my because we're above that, right? The stop loss is above it. Do I have other things? Yes, I do. I have the 61.8 of that move into my stop loss zone. That is added protection for your trade. And if you see higher highs like we are right now, and we see on the 3 and 5, we go on the RSI and we see a divergence of price. So what is a divergence of price? Price here are making higher highs. 5 is higher than 3. But sometimes on the RSI to see a divergence, we're going to see lower, just in that case, right? Right now, this is not good, the real-time price action of 1 inch. Let's just say that. But if we see lower highs, like we are right now, see my line here? We have a line, you can even draw a line on 3 to 5. So we see a higher high. I have a lower high on the RSI. Then that is a divergence of price. It shows you again weakness into the price action, weakness that could be shorted for you. You don't want to short just based on the actual divergence of price or the RSI or the volume. But as a group, it gives you a clear picture of what you could trade and that your trade is protected by different confluence around your trade. So yes, I do use the RSI. I use it as confluence, and I use it when I see a divergence like I'm drawing right now. Just taking a look at the chat. You want me to take a look at the Sol on 15 minutes? Can you take a look at Maddox? Okay, let's do live charting then. You guys are looking for, are kind of wanting to do live charting. Well, I cannot do that with this. Okay, there you go. I'm good now. Okay, let's find some stuff. I usually trade on the 15 minutes, but you can zoom out, right? Actually, it's a good idea to zoom out because you get a clearer picture of what is the general trend of the market that you're trying to short. 1 second, guys. Still fighting my damn flu. I'm trying to get out of. Okay. Let's go on Sol to see what Sol is doing. So on the 1 hour, we see higher highs. We see that we might have bounced on that trend line over here. So you have to be careful. We were doing corrective or a lower low and lower highs. So we were into an actual downtrend, but we bounced on that level. So you have to take that into account. Zooming in. We could have one over here. Could be, but right now I don't know if it's valid. I'm just gonna put that yellow so you guys can see better visibility. Let's bump the actual size of it. There you go. Yeah, vitamin D. Thank you for the advice. I'm out of it. I'm out of my flu, but still have some stuff sticking around, right? So if I'm fibbing this one here, yeah, the 261.8 is hit, but it's hit too many times for me to take into account. So anyway, I don't really want to trade that. It's already passed, right? But I just want to make sure I read the actual chart and not just chart something that is not valid anymore. So we have a trend line here. Everybody can see we are on the 50 minutes. We have the lower highs, lower low, breaking out of it. So now that's a sign. Look for 358 and look for CH1 pattern. So do we have a 358 here? I mean, this could be one. So 3 is not the smallest. 1 is not in 4 is not in the price region of 1. 4 is simple. 2 is more complex, more long, more complex. So let's try to fit that level to see if I have something reacting. I don't. We are already past in the middle of the 1 and 2. So this one for me is not an actual Elliott wave. Maybe we're in the 3 and 4 still, and we might see 5 in the few hours. Let me try to find if this is not it. Is this one the still not bouncing on anything right now? I don't think this one is the one wave though. This is not a retracement wave. This is an impulse wave still. So yeah, I'm not trading anything right now as 358 goes, but you could still do a nice. See, this is had a confluence. Let's zoom out. Price came back down to retest that level and it bounced on it. You zoom in on 50 minutes. You see a downtrend on 50 minutes getting out of it, right? And we see that it could still retest that level. So when you see a breakout of that trend, you find 358, you find CH1, right? So now I could try to find a CH1 on this one. See how we get reaction here 2 times. So this could be a nice CH1. Yeah, because we have reaction over here. See price bounced. We have reaction over here. We have reaction over here. And we have reaction over here on that trend line. So it shows it's reacting to that level. New uptrend, breaking out of it. Now it's time for me to look for CH1. 358, I cannot find anything, right? Bounce to CH1. So if I bring that level here that I draw on the top, which seems to be valid because a lot of reaction over there, and I bring it to lower here, I can see that I could have an entry over here, which could even be protected by the overall trend. If we zoom out again, we have an overall trend here going on for like a few times got retested. So, and it's bounced on that. So it's protection for my trade again from getting stopped out. So for you, the actual, do I have other levels to look out for? I might have a reaction over here. So this could be another level I need to look out for on a CH1 pattern. I'm getting out of the 358 a little bit because I know you guys like that and want to learn a little bit more about the CH1 as well. So if I use the secondary level here, and I draw a line from this secondary level, which even if I extend it, I could see reaction over here, and I bring it down. I see I have a nice zone that I could go long at that level. Stop loss outside of those trend line for added protection, aim for the 61.8 of the next move that's gonna happen. Do I have other confidence on that trade? Let's try to find a 61.8 because I think I have one, and I do. See, we take the bottom of that wave to the top of it. If it's retracing back, we have many levels of protection. We have that trend line on the 15 minutes. We have that trend line on the 1 hour, which is getting retested and got bounced out of it. And we have a 61.8 of that small level over here, of that small wave. Do I have other, if I zoom out again, do I have other 61.8 level? I don't think so. This is not 61.8 of that move. So I don't have that protection, but I have many confluence around that trade. So if the price is coming, I'm going to put an alert over here. That might take some time though to get alerted for that. If price is coming back down like this, and even just to show you the power of the 358, you could even see this. That is added confluence. You see a 358, an Elliott wave, getting and you validate that, and it's valid. And the 61.8 is that, like, at your entry, you're like, I'm taking this thing. This thing is calling for you, right? I mean, you have many confluence. Take your time to draw some nice. Take some time. I mean, sometimes you get like, I'm just gonna draw 358 in there. Zoom out. Take a good look at the overall chart. Where is it heading? It's heading up right now because we were in a downtrend, but overall uptrend. Very nice. Okay, I'm gonna try to long this thing. And when you zoom in, we could have a great long opportunity on this one as a 1, 2, 3, 4, 5. If we fib this one over here as a fib trend-based fib extension, and we see right now it's not, but we see the 61.8, the 261.8 of the fifth wave, or the 361.8 of the fifth wave in here. This is awesome. This is gold. You guys should take that. I mean, if it's calling your name, you show up to the call and you take the trade. You don't take bad trades, you take the good trade. Sorry, man. You could still be in the price could still do that. I know you guys are still in an uptrend, but it's based on what? Gabriel, great. Yeah, Sandman. What is based your trade on? On FOMO? Because price was going up, you say, I'm going to long this thing because it's going up. I'm going to wait for your answer a little bit. So yeah, we see reaction. Really nice chart for me. Even on this is on the 1 hour though. I don't want to trade the 1 hour. We're going to try to snag something on the 15 minutes to see if we can get on something. Now, for the CH1, if you take your 61.8 and you draw from the top to your overall entry, you can already plan your take profit. You you do the change of take profit when you have a valid reaction at the bottom of the trend line over here. So we have a 3.8 risk reward, which is super nice. I would take that. Okay, Sandman, you're taking that based on TC1? Is it on TC1, Sandman? But because I don't see I see a trend line that you drew, but it's not getting respected. So, but yeah, I think it's a TC1. If it's a TC1, it could definitely go up. But if it's a TC1, you already break even, right? You should be break even if you're, yeah. So let that run, Sandman. If the price continue its way up, which it could, and we just have to redraw the channel and find confidence again. But yeah, don't get FOMO out and don't get FOMO in. You're in a trade, you're in there for a reason. Try to stick to your rules. Don't get emotional about your trading, guys. Don't get out if you're in a good trade. This is a good trade. If it's valid, you get it. You got in for a specific reason. Now it's a free trade as well. Don't get out, because if you get out now and the price goes in your favor, you're like, damn, next time I'm not gonna get out. And the other time you get out still, but you get stopped. Now you're like, see, I should have got out the other time. And it's gonna mess up your psychology, man. Don't go into that area. How did I find that entry? This one over here? You mean the CH1? Where did those interior trend line come from? Okay, so I zoomed out. I saw the overall trend going up. I zoomed in. I saw the break of that overall trend. So for me, it signifies that I'd like to see something I'd like to see an uptrend going to an uptrend. This is a downtrend coming to an uptrend, because this is what it happens on every time frame. Uptrend, downtrend, uptrend, downtrend. Even sometimes on sideway motion, on big sideway motion, uptrend, downtrend, uptrend. Those are everywhere. So if you zoom in and you see a downtrend like this one, and you see an actual break of that trend line and going to an uptrend, then you can snipe that an entry using those. You want to trade this thing. So if you take a trend line from that top to those tops, you see confluence, you see reaction, right? Those tops really bounce, and this one here really bounce on it. So how did I find out? How did I find those? I just draw lines. You have to draw lines. There's no magic in this. You draw stuff. Is it reacting? No. You move your line. Is it reacting? No. If you don't find anything reacting to that trend line, you move on. This is not, if this one is not reacting at the top, you can clone that trend to the lower trend all day long. It's not going to react, and you're going to get stopped. But if you see reaction like we are right now, it gives you a good chance of getting a nice trade in the end. But what? Yeah. You mean why I didn't choose this one? Okay. You're showing me right now this. Those contacts just look cleaner. Sure. Let's take a look at this then. Can I be wrong? Of course I can be wrong. You're using. Yeah, but you don't have 2 point of contact, man. CH1, you need 3 point of contact in your overall channel to be able to get an entry. Right now on your top, you're going long, right? So the first line that you need to draw is on the top. Right now you just have 2 point of contacts, but those are next to each other. I wouldn't consider that, and you don't even have a contact. Let me take a look at that. You don't even have contact. You have 1 contact point on your top, right? So for me, it's not valid. You need 2 point. Okay. You guys want me to go on more on the 3 point of contact. I have 1 point over here of contact. Let me just delete my other points just to make sure. We have, you want to go in as soon as possible, right? Because if the more contact point on this level or on the bottom, the more chance you have for it to break. So we have 2 contact point over here. 1, 2, even if I have 3. You don't need 3, but you could have 3. 3 point of contact over here. On that trend line. Going back down, you want to clone that trend line on the bottom because you have 2 good reaction points. Usually, what is added confluence for me is when you have the entry at the overall trend line, the break of the downtrend, retesting it right at that level. That's added confluence. But right now, we don't have that. Can it still be a valid CH1? I think it can. But of course, if you see that's added confluence, and in that specific price action, now you can see for 3 point and you snipe in the 4. Right now we have 3. I see this one over here. So we have price bounce over here on that trend line again, came back up 3, going back down, you snipe the 4, and you go to the 5th. Rami, what's up, Rami? Can we trade 5A and CH1 on 5-minute time frame? Yeah, man. The good thing about the CH1 is that you can the 3-5A is that you can find them everywhere. What is up with somebody drawing on my? Who's drawing on my my screen now? Is that you, Rami?
No, I'm not doing anything.
Wow, somebody are just drawing stuff on my chart. Yeah, sure. I mean, okay, let's find a value, because this one is a nice one. I'm pretty sure Rami would like to see a retest of that trend line for sure. But the added confluence of the 61A, the added confluence of those trend line, and the added confluence of the 1 hour trend line being at the bottom, I think we could have still a nice trade in there. And if we see a valid CH1, a valid 3-5 in there, this is your gold nuggets. This is one of the best trade you can take when you have confluence. So let's continue our way. You guys want me to take a look at another chart, right? Why not short the price action towards 5? Because we don't know if this is 1. If this is the top. How do you know this is the top? We don't know. We don't know. If you have a valid 3-5A in there, like we don't right now, but if you were having one, then of course you could snipe the fifth into a downtrend maybe, but you need to have confidence. Right now we have nothing for me to short. I know some guys in the public are like shorting everything and longing everything everywhere and all the time, but they are losing. And overall, I mean, this is a long time game. If you're just shorting and longing just because the price is moving into one direction without taking a good look, you're gonna get wrecked. Your account's gonna go to zero for sure. So pay attention to that for sure. If you see a good reason to short, you short it. If you don't see good reason to short, just because I drew some line that it could go to 5, doesn't mean the price. I don't have confirmation of that, and doesn't mean the price could not do this. So I mean, we might have this one will go here like this, and boom, we get a new fifth wave, a new Elliott wave forming, and now we can trade the fifth wave going back down. But right now, this is just speculation. We are expecting stuff that could happen, but we're not sure about that. When you're not sure, you don't take a trade. Okay. You want me to take a look at XRP? I don't know. You guys are actually obsessed by XRP. I know Gamu. Gamu likes XRP, right? So I have one wave. Yeah, we could be into one. Because again, if we draw a line over here, this is not good. Let's try to see a trend line over here. Yeah, this is much better. So we see reaction, 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 downtrend, broken. And we fit that level over here. I don't like those big wicks, because usually those are unpredictable. They show reaction, but is your one wave from the bottom? Is it the one wave from here? It's not a clean price action. Of course, you could go over here. So that would make your one wave like this. It could be. This one's going to be your fourth, and this is going to be your fifth. Fifth at the 261.8. Let's draw a trend line over here. Yeah, 4 is really, really complex compared to 2. It could be a good one. I'd like to see right now a break of that trend, though. If I remove this. Yeah, the alternation is really there. Everybody can see here the difference between a simple one and a complex one. Really more complex for the fourth, which is super nice. You can even draw a retracement fib. If you take a regular retracement fib from your bottom to your top of the fifth, we have a nice reaction over here. We have reaction at those level, reaction over here. See, this could be a valid one. But what I like to see right now for me to take this trade would be to, let me take the 4. Like this. So a nice, even like this. Let's try to, but for that, it needs to crash back down pretty quickly. But I don't think it's going to happen, but maybe it will. Like this. So retest of that trend line, A breaking the trend line, not passing 4, passing 3. Now you want to do from the top of 3 to the bottom of 1 of A, draw a line over there, and you want to clone it on the top, which gives you a nice place for you to take your trade. And after that, when you have a valid A, you take a fib retracement tool from 5 to A. You take the entry at the 61.8 of the B, and you write it down. Not that way though, Joe. This is a long. I'm shorting like this. So we take the fib trend-based fib extension from 5 to A back to 5, and we aim for the 161.8, which is right at the top of 1, which is super nice again. Super added confidence that the 161.8 might be the reversal point. We take a fib retracement tool from 0 to 5. We see that the 61.8 is over here. So maybe place an actual alert at the 61.8 level of that chart, just to make sure it's not getting bounced up of the 61.8 and you're getting stopped out at a level of at break even, but still right. So yeah, take a look at just pay attention to the 61.8 of the whole move. But that could work. I'm gonna put that as a reminder. I'm gonna set an alert at near the A. I don't have enough alerts. I'm gonna delete some of my alerts because some of them are already done. LTC, this is done. This one is fine. So I'm gonna go over here, set an alert. When the price break 3, I'm gonna set an alert over there. And when price is gonna retrace back down, crushing that trend line, I'm gonna get alerted, and I don't need to stay in front of the computer all day, even if it's all that I do. Even if I put an alert, I'm looking at the chart even. So I'm a bad guy for that. I look at the chart even if I shouldn't. So yeah, that's about a good. It could be a good 358. We'll see. Does A have to break 4? A must not break 4. If price of 4 goes here, see how it passed the C. This is your trade. It's already completed. If price is not retracing to an entry and is crushing back down like right now, like the A it is, passing 4, going in the price region of 1, you're like, I'm not taking this. Even if it retraces, I'm gonna get stuck because the price, it's already done the trade. I just didn't get the actual entry, but it's done the trade. So don't get it into the entry if the price of A past 4. You want me to take a uni? Let's go uni. Oh. Uni. I don't have uni in there. What the hell? Not on Bybit. It's gonna be on Phoenix. I do. Stop lying to me. There you go. Okay, uni. So zooming out. Let's go in the 1 hour just to make sure that 1 day, 1 hour. I get an overall idea of the overall trend. So we see we have a nice uptrend, but we broke it, guys, and we are retesting it almost now. So when we see the break of a trend and we see a retest, what is gonna happen next? Quick question. Break of an uptrend, price is breaking it and retesting that level. What is usually happening? That's on the 1 hour though. Dropping. Yeah. So it's done for its uptrend. I'm not saying it's gonna go. That's on the 1 hour, right? Everything could happen on the 1 hour, but this could be. It didn't make a lower low, but it did break the trend though. So I could watch this, but this is not a low. This is still a higher low. I wouldn't trade that, but if you want, you could snipe that entry over here and try to write it down. But I wouldn't because it's not a lower low. This is the only reason I'm not. But yeah, guys, you have to pay attention to the trend break. So you guys this is on 5 minutes, right? So yeah, taking into account that this might go back down if it goes to here. Let's try to zoom in, see if we have an Elliott wave. Could have one here. And what I hope right now, I'm not fibbing that for now. I'm just going to show you what I like to see. I like to see the 5th going to here. Because this is Hadad Confluence. We have a nice trend line on the 1 hour. We broke it, so we know we could look for short. And now we have an Elliott wave maybe going to that price region. I'd love it for it to go into that price region because that means I could short it, or I could at least draw something, a CH1 pattern or something like that around that actual confluence. Let me just delete that nice circle. I know I'm good at circling stuff. So let's fib that thing then. I'm gonna fib from here to here, back to here. I say reaction on the 261.8, but you have to be careful on those things. That's why you want to zoom out. Take a good look around. Because if you're trying to short over here, right on top, without confluence, price could still go to the 361.8 over here, which is right next to the actual trend line. And buyers could push it up to get stopped out for the shorts and short taking place at the actual level of that trend line. That's thing you want to take consideration. Can it be a 358 because it almost went to the 61.8? It could. One is not retracing past 0. 4 is really, really complex. You guys can see that, right? A lot of complexity. 2 is really simple. Almost one line drop. You get 3 is not the smallest. The 5th is like almost at the 261.8. You can draw a trend line over here on 2 to 4 and see the price breaking it like it's trying right now. But if we see it bounce on it, don't take it. I wouldn't take that. Even if it's past 3, price bounce on the level, it shows that the price didn't have the weakness we're looking for. Do we have a divergence of price? Let's go on the
Joe, the reason why I looked at this trade is because of the divergence. I saw there's a massive divergence between 3 and 4.
Yeah,
3 and 5, sorry.
Yeah. So we have a higher highs on the price action, and we have lower highs on the price action. Divergence can happen and can be that's a reversal point, but it's not set in stone. You could have a divergence and price continue its way up like we had in the 2021 bull run, and the RSI just made a higher high after that. So you have to stay, but yeah, that's Hadad Confluence for sure. You cannot just look away and don't consider that for sure. So if price is breaking back down on this one here, it could still be a nice trade. So I'm going to take, and that's going to be the last thing I'm going to look at, guys. So if we see A, B, and this one here, I could still look at that for sure. I'm not gonna ignore it just because it didn't touch that trend line. But yeah, do we have other confluence? We see a new, we see a trend over here go at the bottom of it. Yeah, I don't have retouch on that though, but I do have this. If I clone it up, it's already past that, so I don't have a CH1 channel in there, but I could still be a nice trade even if we don't. I'm gonna set the reminder. Right now, the price past the actual. So we could do this, a real nice head and shoulder, price past the actual 3. But again, I'm gonna need to show a little bit more strength in there. I'm gonna put two actual alert, one right next to my actual 4 here, my A, just to make sure if price come back down, I get alerted, and one closer to my entry. No, I'm gonna just leave that as the actual alert, and I'm gonna monitor that for sure. That's about it, guys. That's about it. I hope you guys had a good trading mentoring session for the 358 and the CH1, because we went through a little bit of that. I know it's Rami's jam. Sorry, Rami, we stole a little bit of your thunder, getting a look at the actual CH1. So you're welcome, guys. You're welcome. This is going to be recorded and posted on Teachable. And keep rocking your trade. Stay patient. If you don't have an edge, stay on the sideline. Wait for your edge to shine. Don't get exhausted mentally and financially trying to take trades when it's not working. Take care, everyone. Have a great week of trading.